a major crisis in the Middle East could actually be one of the best things to happen for Russia in years. So in this briefing, we're going to break down exactly how a conflict in the Straits of Hormuz could totally reshape the global energy market, and more importantly, what you need to be thinking about to protect your business. Okay, here's how we're going to walk through this. First, we'll pinpoint the epicenter, the Strait of Hormuz. Then we'll dive into the three biggest risks that spin out from there: supply chain chaos, Europe's weak spot, and Russia's big strategic gain. And we'll wrap it all up with the keynotes you'll need for the coming quarter. So let's just start with a question. If there's a conflict involving the US, Israel, and Iran, who really wins? Well, the answer probably isn't who you think. It's a country that's not even directly in the fight, but is perfectly positioned to gain from all the chaos. To really get why, you have to start at the heart of the matter, the Strait of Hormuz. Just look at this number, 20%. That's a fifth of all the world's oil and natural gas flowing through this one tiny waterway. It is, without a doubt, one of the most critical economic choke points on the entire planet. But here's the thing, it doesn't even take a full-on military blockade to shut it down. As tanker tracking experts at Kepler put it, the strait can be technically open but effectively closed. All it takes is for insurance costs to skyrocket and the risks to become too high. And suddenly, shipping companies just stop sending their boats there. Traffic grinds to a halt without a single shot ever being fired. So what happens when the world's most important energy highway is, for all intents and purposes, closed for business? Well, that brings us right to our first huge risk, a fundamental breakdown of the energy supply chain. The amount of supply at risk here is just staggering. If Hormuz closes, you're not just losing the official oil from heavyweights like Saudi Arabia, the UAE, Kuwait, and Iraq, you're also losing all that sanctioned Iranian oil that moves around in the shadow fleet. That's a huge, if unofficial, piece of the global puzzle that would just vanish. Now, a disruption on this scale is going to have massive consequences, but one region is particularly exposed, and that brings us to our second key risk: Europe's deep vulnerability. You have to understand, Europe is facing a two-front energy war. Out at sea, if Hormuz shuts down, Iranian crude is off the table. That makes Russia pretty much the only seller left for cheap shadow fleet oil. Meanwhile, on land, you've got countries like Hungary and Slovakia that are totally dependent on Russia's friendship pipeline. That gives Moscow a massive political hammer to block EU sanctions. A crisis at sea just makes this problem on land that much worse. And the economic fallout is immediate. We've already seen European gas prices jump 20% just on the threat of a conflict. But that's just the start. Goldman Sachs is forecasting a potential 130% spike. Some analysts are saying if the closure lasts more than 2 months, prices could triple. I mean, that would be a devastating blow to Europe's economy, which is already growing at a snail's pace. So all this economic chaos, it feeds directly into our third and maybe the most significant geopolitical risk, a major strategic power shift, and it's all in Russia's favor. You know, as Bloomberg Xavier Blas puts it really simply, Vladimir Putin will profit from this war. It's a pretty straightforward equation, right? Higher oil prices globally, plus more demand for Russian oil specifically, that just means more cash from Moscow to fund its goals. And you can already see where that new demand is going to come from. Look at the major Asian markets, India and China. They'd actually been easing up on Russian oil imports because of Western pressure, but now they're expected to completely reverse course. To make up for the shortfall from the Middle East, their reliance on Russian crude is set to go way up. This whole situation creates a really tough dilemma for the United States. You've got congressional elections on the horizon, which means keeping gas prices low for voters is a top priority. This pressure has reportedly led the Treasury to ease up on some Russian oil sanctions just to help keep the global market stable. So the need to manage prices at home ends up working against the bigger strategic goal of isolating Russia. It's a classic policy bind. Okay, so after all that, what does this actually mean for you and your business? Let's distill all this down into the essential takeaways you need for the next quarter. All right, here's your strategic checklist. 3 risks, 3 key preventative actions. First, supply chain disruption. Your number one move is to actively diversify your energy suppliers and get less dependent on the Persian Gulf. Second, European market instability. You've got to hedge against that price volatility and take a hard look at your exposure to an economic slowdown in Europe. And third, Russian geopolitical leverage. You absolutely have to monitor sanction policies, and, this is crucial, their real-world, often unintended consequences. So we'll leave you with this to think about. Is your organization's energy procurement strategy really resilient enough to handle these kinds of geopolitical shocks? I think the big takeaway from all this is that a regional conflict now has immediate and frankly pretty counterintuitive global consequences that you have to be ready for. To stay ahead of these kinds of developments with clear, no-nonsense analysis, make sure you subscribe to our Global Conflict Brief channel. Thanks so much for joining us.